Oh, didn't see you there. Stephen Ho here. And I figured we would do a series of videos to learn you how to mortgage. Seeing as no one teaches us anything about finances, here are a couple of common terms in mortgaging. Learn you how to mortgage? So we'll start with the basics. What's a term? A term is the length of time that you have committed with a lender, with specific mortgage rates, conditions, and terms. A typical Canadian mortgage is a 5-year term, but it can range from 1 to 10 years. Amortization. Amortization is the length of time it takes to pay off the entire mortgage. Typically it's 25 years, but it can be stretched out to 30 years if you're putting more than 20% down. Longer amortization reduces your monthly payments. It takes a little longer to pay off, which stretches out your payments. But overall, you are paying a little bit more in interest. What's the difference between open and closed mortgages? An open mortgage can be paid off in full or in part at any moment without paying a prepayment penalty. The interest rate on an open mortgage is often higher than on a closed mortgage. A closed mortgage is one where you agree to the length of the term. You cannot prepay it without any prepayment penalties. There are allowances for a certain amount of prepayment per year, but none of this can be renegotiated until the term is up. Any prepayment made on a closed mortgage goes directly against the principal of the mortgage. What's the difference between pre-qualified and pre-approved? The short answer is you get pre-qualified before you get pre-approved. Pre-qualifying is generally done over the internet or on the phone without any serious check on your credit or employment. Doesn't really mean anything, the lender just wants your information. Pre-qualifying doesn't involve a credit check or an analysis of your credit report. It's just an opportunity for the lender to find out your goals and find out a little bit more about you. Pre-approval is the next step, which is more involved. You complete an entire mortgage application and you provide the lender with all the documentation required, such as proof of employment and banking information. They can tell you the maximum amount of mortgage you could qualify for, estimate your mortgage payments, and lock in an interest rate for you for up to 60 to 120 days. The pre-approval is what you want to have before you go and look at houses with me. Alright, that's it for the first installment of Learning to Mortgage. If there's anything else you'd like to go over, comment below, let me know. Be sure to follow, subscribe, and I'll see you in the next one.